Welcome back to Strongman Personal Finance, everybody. Today we're going to talk about a stock that isn't that bad. Am I buying it? Probably not, because I don't really buy individual stocks, except for that sweet, delicious Alibaba. But this is not a bad stock, all things considered. Much better than Tattooed Nutsack, but we're not going to go into that. Today we're talking about Nintendo. Or as somebody in Italy used to say, Nintendo 64. That's right. I used to live in Italy when I was young. And there was this guy who thought he could speak Italian, who lived on the army base with me. And he'd always say, Nintendo 64. It was freaking annoying. Stupid. So every time I think of Nintendo, I think of Nintendo 64. Anyway, let's look at Nintendo stock. Now, a lot of you clowns on YouTube, you just look at past performance. So it's like, oh, it went up a lot, so buy it. Well, we're going to look at something different. We're going to look at fundamentals. And we're going to look at the future, not what happened in the past. So, Nintendo. Ticker symbol NTDOY. There's actually two stocks. There's NTDOY, which we're looking at, and NTDOF, which is, I guess NTDOY is 1/8 of a share. So I guess it's easier to trade of a Nintendo stock. Something like that. We're looking at Nintendo because that's what I found on Robinhood. And that's what you clowns will probably buy in your taxable brokerage accounts. So the stock is currently trading for $56.33, 36 cents USD, but on Morningstar it's in yen. Some basic fundamentals. Price to earnings ratio, 12, nice and low. PE ratio, including extraordinary items, 12.8. Wow, big deal there. Price to cash flow, 12. Price to sales, 4. Price to books, 4. Not too bad. Not too crazy. Now, what I like about this country is they have freaking crazy company is that they have crazy margins. Gross margin, 54%. Operating margin, 36%. Pre-tax margin, 38%. Net margin, 27%. That is an extremely profitable freaking company. And look at the return on invested capital, 28%. I mean, holy freaking crap. You go down to the capital structure, low debt to equity, low debt to assets. Interest coverage ratio is extremely high. They're not going to go bankrupt anytime soon, I'll tell you that. Like, all around, looking at the fundamentals of this company, without even looking at, revenue trends, it's pretty freaking amazing. Current ratio, 3.84. Quick ratio, 3.67. Cash ratio, 3. I mean, holy crap. It's freaking crazy. This company's looking pretty delicious just on, a snapshot level. Now, of course, you have to dig deeper and put in assumptions and kind of project in the future where it's going to go. So, let's go check out some of the data on Morningstar. Now, if you look at the revenue here on Morningstar, which is this top column right here, this is in Japanese yen. So, when you do your conversions, you actually have to account for different currency, okay? You can't plug this in and then, get a stock price of $10,000 and think you're getting a massive deal. It's in yen, okay? Don't be stupid. Anyway, so as you can see, Nintendo actually had a couple years of, revenue downtrends. I mean, they were going down and down and down and down every freaking year, all the way to 2017. I mean, that's dropping from 647 million to, what is that, a trillion? Yeah, it's 647 trillion of freaking revenue. They need to freaking, make their currency less, devalued. All the way down to 489 trillion. And then, well, that's a billion, my bad. Duh. But then they had a massive increase. They had $1 trillion of revenue starting in 2018, 1.2 trillion in 2019, 1.3 trillion, 1.7 trillion. That growth all came from the Nintendo Switch. That was a huge, massive change in the company. And you can actually verify that because I went on Statista, which you can always trust, and I looked at the trends. So basically, this chart right here disaggregates Nintendo's revenue by source. So you got Nintendo 3DS in the blue, you got the Wii U in the dark blue or black, Nintendo Switch is in the gray, see a lot of gray there, mobile, playing cards, etc., etc. So you see here in 2017, Nintendo was basically flatlined or declining in revenues. And then all of a sudden, massive explosion in 2019, all from the freaking Switch basically. Or 2018, 2019, 2020, 2021. That Nintendo Switch has freaking blown it out of the park. I'll tell you that. So, the thing to keep in mind is whichever way Nintendo Switch goes, little controller thing, is the way the company goes. If they release a new product and it sucks, maybe Nintendo isn't going to be growing as fast as it used to, or if competitors are producing better products in the future, because eventually the Switch is going to expire, and then they're going to have a new platform. And then really, Nintendo's growth prospects are probably going to be, based on that new platform, whatever that is. So as of right now, the Switch has been blowing it out of the water. I mean, just killing it. And that's really been carrying Nintendo to the moon. Now, personally, I like Nintendo a lot. I have very strong childhood memories of Nintendo. And it would be nice to own this company. I remember playing the 64, the Nintendo 64. Super Smash Bros., Mario 64, GoldenEye, classic, Perfect Dark. So many good freaking games. And what I don't understand, Nintendo, I'm talking to you, CEO, why don't y'all, remaster the N64? You put all the games in a little box, you sell it for $200. $200. Those things would sell like freaking hotcakes. Like freaking hotcakes. Anyway, let's get back to the financials. So, as you can see, it's all about the Nintendo Switch. Gross margin has been massively increasing. Operating income, operating margin. All these margins have been massively increasing. And it's all thanks to the Switch. So this company's really, really dependent on the Switch. Which isn't necessarily a bad thing if it continues to sell. But eventually it's going to be replaced. And then hopefully the new thing improves. Shares have been going down pretty consistently. Very slowly, but they have been going down. So they're not going to be diluting you. Free cash flow, massive growth. Massive freaking growth. Starting in 2018 with the Switch all the way to now. Pretty freaking good. I mean, everything about this company is freaking awesome. You just have to buy it at the right price. All right. Let's look at financial health. I like to look at financial health. You always have to make sure, you always have to check debt, okay? So, like I said, we checked earlier. Current ratio is good. Quick ratio is good. Anything above 1 for the current ratio or quick ratio, that's not bad. You don't want it to be below 1 because that means they could potentially go out of business within a year. Most likely not, but it's possible if it's below 1, even for a massive company. So overall, I mean, the margins are freaking crazy. 27% profit margin? Holy crap. The only business I know that's more profitable is my tutoring business because I do it from home. Anyway, so last thing we're going to do is we're going to look at my stock analyzer tool. And yes, this may resemble Everything Money's tool, but it's totally not a ripoff of their tool, okay? I did not take their tool and make my own. Now, the thing is, if I go on Everything Money, let me see. I wasn't able to pull up their freaking Nintendo thing. Let's see if I can pull up Nintendo. 64. I wasn't able to pull up the data, or when I did, it was just all jacked up or something like that. I don't know what's going on with this. There's some stocks on here that I can't pull up. Nintendo, NTO. Okay, and they have some stuff here, but, you go look at, cash flow, and it's all jacked up. What's going on here? So, I couldn't really use this. That's why I'm glad I have this stock analyzer tool thing. Anyway, so, if we do a quick look around of changes in revenue over the last 10 years, revenue has had pretty solid growth because of the Switch. Now, I assume going forward, a lot more conservative revenue growth. So even though you see 34% here over the last year, 21, 18, 28, I assume 369. 369. Okay? Share change, pretty low, standard buybacks. So nothing really crazy there. And then I basically get a decent perspective of the net margin over the last couple of years, and that's what I apply to my my formula. So if you look at the net margin here, it's highlighted. Their net margin fluctuated, starting in 2018 from 13%, and then it's steadily increased all the way to 27%. But it may not stay there forever, so you want to be careful. All right? Blah, 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 blah. Free cash flow is a percentage of sales. That's also massively increased. So in your conservative assessments here in the yellow, you want to have it lower because they may not always sustain that massive growth. I mean, look at Nintendo's past. They had a long period of time where their revenues were declining every freaking year. And then all of a sudden, the Switch basically saved their butts. So my assumptions were revenue growth, 369. 369. I hate that song. Share change, 0 to negative 0.5. I mean, best case, sure. Profit margin 23 to 27, and you can even be more conservative there. Free cash flow as a percentage of revenue, 20 to 30%. PE, 8, 10, 12. And of course, a 15% required rate of return. Because I'm not going to buy an individual stock unless I can knock it out of the park. So, look at my buy points. Oh my God. This is a $4,850 stock. Oh, wait. The numbers are in Japanese yen, so you have to convert it. So I converted it to Japanese yen, and I get my buy points, okay? Low assumptions between 26 and 30. Middle assumptions between, well, 43 exactly. Hope my formulas aren't broken here. And then high assumptions between 59 and 66%. So if you believe these high assumptions, which I don't think are insanely high, I mean, because revenue has been growing pretty quickly. Like, if revenue keeps growing at 15%, this stock is a screaming freaking buy. But if you believe these high assumptions, 9% revenue growth, very high profit margins, and a PE of 12, which is what it's at now, it's a pretty good freaking buy. Which I even think Kathy Wood has this, which is one of the few stocks that I actually agree with that she has. So final opinion, I'm not going to buy Nintendo. I mean, if it dips more, like if it gets into like the 40s, okay, I'm really going to start looking at this stock. And I'm not just pulling that number out of my butt. You can see that there's actually numbers here that I calculated. But if it gets in the 40s, okay, I'll consider maybe putting $500 in there, you know what I'm saying? Maybe 1,000, because I love my Nintendo. I have very precious memories of it. Anyway, that's my thoughts. Not a bad stock. I mean, I don't think you can go wrong. The only risk is that if the Switch gets switched out with a new thing, and that new thing, whatever system they make, sucks, you know, Nintendo could potentially go into a long period of decline, which they were experiencing way in the past before they got the Switch. So that's my thoughts. What do y'all think? You gonna buy this stock? You gonna buy it? Or are you gonna buy my book instead? Stop being a broke loser. See, you could buy 5 copies of my book instead of buying one NTDOY. But, you know, it's just too expensive. Anyway, like, subscribe, tell your friends about me. Have a wonderful day. Choo!